to OAWA's weekly update on financial markets, where we bring you a curated selection of the most impactful events. We begin with some very good news. The Indian stock market has been seeing a bullish momentum for past couple of months, and the bulls are clearly in charge of the Lal Street. This week, the benchmark Sensex scaled an all-time high of 63,583 intraday on 21st June, and the Nifty 50 also closed at an all-time high of 18,857. Strong macroeconomic indicators and optimistic growth outlook, coupled with declining inflation, have made both domestic and foreign investors bullish on Indian equities. While the stock market is scaling fresh highs, the market regulator SEBI continues with its crackdown on stock manipulation. This week, SEBI has barred 135 entities by issuing an interim restraining order on accessing the securities market and fining them Rs 135 crores. In its investigation, the Securities and Exchange Board of India found a set of entities manipulating shares of 5 listed companies: Maurya Udyog, 7NR Retail, Darjeeling Ropeway, GBL Industries, and Vishal Fabrics. SEBI has also cautioned the general public to be aware of such fraudulent activities being carried out through SMS messages, various websites, social media like Telegram, Instagram, YouTube, and has further advised that the common public should deal only with SEBI registered intermediaries. Moving on to news on the global economy front, the US Federal Reserve Chairman Powell told lawmakers of the Congress in US that the fight against inflation has a long way to go. He went on to say that while the Fed has been seeing the effects of their policy tightening on demand in the most interest rate sensitive sectors of the economy, such as housing, it will take time for the full effects of monetary policy tightening to be realized on inflation. And the UK continues to face high inflation. Its latest inflation figure released this week, the CPI for May 2023, shows a rise of 8.7% year on year, the same as the month before. The UK economy is facing multiple headwinds. Not only is inflation running high, but the UK debt has exceeded 100% of GDP for the first time in 62 years, for which too inflation is majorly to blame. And finally, moving on to news on global reserve currencies, as per a report recently released by the ECB, that is European Central Bank, the euro maintained its second position behind the US dollar as the world's second most important reserve currency. In 2022, the share of euros held by world central banks increased to 20.5% as compared to the US dollar, which accounts for nearly 60%. According to Fabio Panetta, an ECB board member, European economic and financial integration will be pivotal in increasing the resilience of the international role of the euro in a potentially more fragmented world economy. And that's it from our side this week. Please click like and share if you enjoyed this content, and do visit our website www.oawa.in for information on our courses.